Has the US stock market finally stopped falling? Well, it kinda depends on who you ask. Right now, there's a clear divide. American investment banks, they're pretty optimistic. European banks, not so much. On Tuesday, analysts from UBS and HSBC warned that the worst might not be over. UBS thinks the S&P 500 could drop another 8%. HSBC, they've downgraded US stocks not once, but twice. But across the ocean, Wall Street banks like JPMorgan and Morgan Stanley are saying, relax, the big sell-off is probably done. Some even believe we could see a short-term rebound. So why such different opinions? It all comes down to one word: uncertainty. On April 2nd, new tariffs from the US are set to kick in. That could shake up markets, and we still don't know how other countries might react. At the same time, inflation is a concern. Economic growth is slowing, and people are starting to wonder, is the AI hype cooling off too? HSBC strategists put it bluntly. The chance of this uncertainty magically disappearing after April 2nd, very low. And the numbers back it up. U.S. consumer confidence just hit a 4-year low. Bank of America says investors were net sellers of U.S. stocks for the first time in 2 months. Sure, we've seen a small bounce in the market, but it hasn't lasted long. A lot of those buy-the-dip moments, they've fizzled out quickly. That's why banks like HSBC are urging caution. UBS even has a specific number. They think the S&P 500 could fall to 5,300. Right now, it's still above 5,750. But don't forget, not everyone's bearish. Goldman Sachs and others still believe stocks will go higher. Some are even predicting the S&P will hit 6,500 or more by the end of the year. Bloomberg gathered a bunch of forecasts, and they're all over the place. The lowest, 5,500. The highest, a bold 7,100. So, has the market crash really ended? Maybe. But with all these mixed signals, one thing's for sure, this market is far from calm.